Good morning, traders. It is July 5th, 2017, Wednesday at 8:02 a.m. Chicago time, 9:02 New York time. Thanks for joining me again, and welcome to a new month. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning is mixed. The Nasdaq's up 20 and a half points over the last close. I don't know what it is. I haven't reconciled what it is against Friday. I've eliminated, because today's session is essentially a continuation from Sunday till now. I've eliminated the trading that has occurred over the last 2 days. Basically, it's a very, very odd holiday that we just had as far as placement. So I'm 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 I've wiped away Monday's trading and Sunday night's trading, and that takes away quite a bit because the market's been moving around a fair amount over the last couple of days while we're on holiday. But overall, I need the RTH or the day session to represent what the stocks actually did, and so I eliminate those days to keep things nice and clear. The volume over the last couple of days, on Monday's session, which is a half session, was around 602,000 contracts, which is pretty good for a half day session. Um, and then the overnight sessions have been very, very light. So overall, we're not missing out on too much. So that's what I did. Looking at the market, as I said, the crude oil has been on a tear, trading up at 46.60. Crude oil as a basis of comparison was trading around $45 on Thursday and 44, the upper 44s on Wednesday. I think it closed Wednesday at about 44.70 or so. So it's up quite a bit, almost $2 since last Wednesday. So this morning, it's showing me that crude is opening lower, but I'm seeing uh, a gap up from last Friday. Crude's trading at 46.59, followed by the mini Russell, which is down 6.7 points or 0.47%. Crude shows down 1%. The leader again is the Nasdaq, up 19 points or 0.34%, followed by the US dollar, and the S&P 500 is up 2.5%, trading just above unchanged over the prior session. So that's what the market stance is. As far as the news, looking at what's likely to drive us here, I'm sure you all heard about the North Korean ICBM that was launched towards Japan, the test firing that was launched towards Japan on Monday, I believe, or was it yesterday? I don't. The days are a blur. Which is provoking a reaction by the U.S. The U.S. is calling for a global response. That's creating a hotspot there. Today we get the Fed minutes coming out at 2 p.m. Eastern, and the market's expecting it to reveal more details about the Fed's plan to unwind its $4.5 trillion balance sheet. Also, the 10-year hit its highest level since May 12th. The U.S. 10-year yield ticked to 235 during the holiday trading on Tuesday yesterday, which is probing a critical, what's supposedly is a critical area, 232. 232 singled out by a bond guru named Jeff Gundlach. Um, and there's a lot here to cover. I won't spend much time on that. I'll keep this brief. But overall, there's a fair amount of news over the last couple of days. I suggest you catch up just to see what the market's sentiment or disposition is. It's important in setting up, letting us know what to listen to in our news feeds. Um, as far as what we're expecting, since it's not really the beginning of the week, but overall, today we're looking for we got very important the China Services PMI business number came out, but this morning we're getting durable goods at 10 o'clock Eastern. For May, expecting negative 1.1%. Also at 10 o'clock, we get factory orders expecting negative 0.5%. And again, as I said, the FOMC meeting minutes at 2 p.m. I want to remind you that the EI natural the DOE numbers, the inventory numbers, will not come out today for crude because of the holiday. Uh, Generally, they will be moved. These are moved to 11 o'clock the next day, Thursday. So tomorrow we'll get nat gas at 10:30 Eastern, and then 11 o'clock we'll get crude oil inventories. That's usually how it works. Okay. For the rest of the week, though, in looking at what our expectations are, tomorrow also has a lot of ECB speakers. We get ECB Villeroy at 1:50 and 3 a.m. Eastern. Um, the USB, the ECB account of the monetary policy meeting happening at 7:30 Eastern a.m. and then at 10 a.m. we get Fed Speaker Powell, and then at noon Eastern we get ECB Speaker Weideman. That's Thursday, and then Friday we get a slew of numbers from the UK, but we also get the non-farm payrolls this Friday at 8:30 Eastern. For June, the expectation right now is 180,000 plus 180,000. Private payrolls expectation is 173, and the unemployment rate's expected at 4.3% for June. That's a key figure. So Friday's a big day for the market this week. Okay, so let's take a look at what we expected on Friday versus what we got. Here we go. Primary hypothesis Friday was for the market to start to move down on the open. Let me actually let that play out a little bit. Move down, become responsive on the open, find a base, and then start to move back up. And then I drew this line here for the end of month, and then I wrote that it could go either way, higher or lower. Hard to tell, but up to that point, I was looking for responsive selling down into the close of the prior day, and then for the market to pop up into the 24, 27, 24, 28 area before we get into end of month, end of quarter, and the half year mark, H1 mark for equities. That was the primary hypothesis on Friday. The secondary hypothesis was for a push higher that gets impulsive selling and then continued impulsive selling down into the 2409, 2410 base for a bounce back up. The tertiary hypothesis is for a pullback and then impulsive strong higher as the market squeezes shorts for a push towards that 24, 40, 50 triple top. At this point, we have a triple top up here. That is a week, that's likely to be a week high. So the expectation is the market pushes 24.35 1/4, which is the MC point of control. Uh, Balance in that area and then resolve itself upwards. That did not happen, obviously, on Friday. So here's what took place on Friday. We had an open auction as expected. Market is responsive, gets down into 24.18. We put in 3 local bottoms here, triple bottom. Not very common that we leave those behind, but we have a triple bottom right against the prior day's close, which is right here, 24.1950, and then the market bounces back up to 24.2975. The expectation was 24.28, and then we got that closing move. The closing move had a lot of selling volume in it and had really good range. The market dropped 10 points on this closing move in the last minute of the stock exchange trading. We dropped 10 points back into the point of control, which we brought down, and we ended up finishing with a point of control that's a little bit higher, with an inside day, tighter range, and still battling this composite low volume node at 2550. So that's how we ended up. So this was hypo one that played out on on Friday, except for the sell-off. Here's another view on the sell-off, so you can see the market push down, set up a base, started to move up as expected to 29.75 or so, and then we had a really good correction or rebalance on the month end Q quarter end, and you can see the volume was about three times. The volume here is about three times what was expected. The expected volume was 122, and we got 292, so about two and a half times the volume, the normal volume into the close. If you combine both bars, we have about three times the volume on these last two bars um, of the session of the first half of the year. My brain's not working this morning. So here's where we are. So as I pull back and I show you where we're balancing from, you can see here that we tested down and then we pushed to new all-time highs. We tested down lower and then we're up here again. What this is doing is it's creating this drop, pull, push the high, come back to the middle, mess around in the middle, push the low, come back to the middle, mess around in the middle. So what this market is doing essentially is it's trading from the extremes in, and it keeps pushing the extremes farther and further out. So this generally gives us a setup for something for one side or the other to break and for a large move to take place. Right now, it's hard to tell what side that is, but overall, I keep extending this composite back and forward just to be able to capture what's going on in between here. And overall, we're still in the bulk of the balance that we've had since the beginning of the month of June. So the entire month of June was really spent in this zone right here. And we are back in it. We're currently trading 24.29, 24.35 and a quarter. Above us is still the point of control, this black line. And the market just keeps testing away and coming back, then testing higher, coming back, testing lower, coming back, and that's where we are today. So we're still trading in a wider balance. There's a lot of news that could lead us lower. There's a lot of news that could lead us higher. Neither side is winning, but when you look at the daily, there's no question that the Bulls are still in control in that overall we have flagged near all-time highs and are just sitting up here. So if you look at what we've done, here's what these are. These bars are day bars, and they are day session only bars, so they represent what's going on in the underlying market. And you can see we bounce back here a fair amount, then we break higher, then we balance, then we break higher, then we balance. We balance for an extended period of time here, and then we balance some more, then we break higher, we balance some more, and we are not giving up the highs here and not moving quickly or swiftly away and lower. We're not pushing into the lower balance areas, so we're holding on to this high volume area up here, and we have a long ways to test what's below us, which is down at 23.15, the next low volume node that takes us out of this. So we are stuck here in the 24.51.50 down to 23.15. That's a big range right there that we are just kind of rehashing and regurgitating over and over again. So take it easy. That's basically the conclusion of that. There's really not much you can do to push this along. Oh, wrong chart. To push this along, the idea here is that we're seeing some signs of some selling coming in. We see that the weekly one-time framing has stopped. So we broke this low, the weekly low last week by a lot. So we broke it by this much. And the one-time framing up on a weekly has stopped, and we may start one-time framing down from here. So we'll see how that plays out. So I'm cautious on the buy side above 24.35.50. You just have to be cautious not to hang on too tight. for a ride to the top. I don't see a sign yet that it's ready to take the top yet again. So it's really, again, the most important thing to take away. It's an outside in type of trade. It's a rebalancing trade. So I'm buying dips and selling rallies, that sort of stuff back into balance. We're not going anywhere. We're really stuck in the 24.20 to 24.40 range. And later this week we have non-farm payrolls, so the expectation is that something might move us, but the non-farm payrolls has not moved this much in the past few months, if at all. I'm talking about, 4 to 6 point ranges. It's pretty abysmal. But this morning, the expectation is for an open auction in range. I'm looking for it to be responsive down into support, which is around the 24 for me, which is around the 24-25 area. I expect it to find a bottom and then start to move towards 24.35 and a quarter. That would be hypo 1. Okay, secondary hypothesis is a selling hypothesis. Open auction tests higher, tests the prior day's high. We still have those multiple highs at 24.40, but I don't believe we have the fuel yet to take those on. So I'm expecting it to drop through the low, the opening swing low, and start to tackle 24.21, and then start to push towards 16 and then look for a bounce up into the close. Those are your two main hypotheses today. Those are the areas that I'll be looking to trade against and aim for once the market makes its move. Okay, so I'll leave you with that. I'll keep it at 17 minutes here. That's long enough. Good luck today. Just stay steady. It's a short week and Friday has a key number in it. So just save your bullets for the higher quality setups as always. Good luck, and I'll catch you tomorrow morning. Take care.